What's going on, guys? Welcome to today's live stream. Thanks for joining me. What time for Mountain Daily? Oh, dang, we got a bearish engulfing candle working on here on this chart. All right, anyway. Welcome. Thanks for being a part. Gonna do a live stream today. You can ask me anything. Post your questions in the comments or the chat. I can see them on the side of my screen here. Excuse me. Otherwise, yeah, that's it, you guys. I'm heading to LA this evening, so that'll be fun. So we'll get some questions in here quick. Shout out to BingX for sponsoring the stream. They've been awesome. They've grown so much since I started working with them like 2 years ago as an advisor, helping them improve the platform. So if you guys haven't tried it, check it out in the link below. And I always tell people this for new traders, or if you're trying to test a new strategy, they have a virtual trading currency. It's called VST. They used to load your account. I'm not sure if they do anymore, but if you make a new account and it's not in there, just contact the chat support people and they'll get you hooked up with some virtual currency. So that way you can either paper trade to see how the exchange works, get familiar with the exchange, or to practice a new strategy. So anyway, got tons of questions here. Let's just get right into it. Somebody asked what books I would suggest to learn to trade. I'm not a big book guy, honestly, so that's not a good question for me. What I did was went around on Twitter, found some good traders that actually looked like they knew what they were doing and understood risk management, understood, like they gave me both scenarios and they didn't, what else? They gave me both scenarios and they weren't just like posting bullshit for engagement. Okay, so it's kind of like once you really start to learn a little bit about trading, you'll realize who's full of shit on Twitter and who actually kind of knows what they're doing. So that's first off, and then I just kind of started asking them questions about their charts if I didn't understand something that they had on there, and that was a really good learning experience. I asked questions just all the time anyway. Sometimes I got answers, sometimes I didn't. Then I went to Google and I found a couple articles. Mainly I was researching Wyckoff and accumulation and distribution. That's really what I wanted to understand, was how to find accumulation and distribution, because those are obviously at the tops and bottoms. So if you can identify those, it's a very good starting point. Not only that, not to just like learn what it is, but like what makes it up, right? Like accumulation isn't just like, oh, price went sideways for a while after a drop, right? Whoops, let me get rid of all this shit. Accumulation isn't just as simple as this, because this could be redistribution and you go lower. So learning actually what makes it, like you've got your selling climax and you've got your automatic response or rebound or whatever it's called. And then you've got your spring and your test, and those, each part is important, because I've had failed springs before and I've bought, tried to buy the spring and it's a failed spring, and I've been able to get out of that before I, got stopped out at a loss or whatever. So there's multiple different parts to accumulation, and the whole market in general is a big psychological thing. Like the reason that price drops, like even on something like this, the reason that price drops is because people FOMO bought here, and then once price drops, they panic sell. So they FOMO bought here, you had people FOMO buying, and then you have people panic selling because price went below their entry. It's as simple as that. That is a psychological reason for something to happen in the market, right? If you go to the Bitcoin chart, where's Bitcoin? Okay, literally at the very top, right? We have FOMO buying up here, and what happens? People FOMO bought this wick, and as soon as price starts going below their entry, they start panic selling, and then all these people below their entry, they start panic selling. And that kind of becomes a failed rally type bull trap deal. But anyway, so psychology is really good to learn too. What makes a market, the emotions that make it, and why people would panic sell or panic buy in certain areas, and how you can kind of counter trade the emotions of the market. All right. And then I just practiced. Like what I would literally do is I would just go draw lines. I'd be like, this looks like a symmetrical triangle, okay? And I would draw this line here, and I'd be like, and I'd save it, and I'd come back to it a week later or a month later or whatever, and be like, oh, that actually worked out, right? I'd be like, oh, this looks like a Head and Shoulders somewhere or something, okay? So I would draw patterns, I would draw trend lines and see how price reacted to them. And I wasn't actively trading, because when you're trying to learn, you really shouldn't be actively trading that much, because you should just be learning, because once you start actively trading, you start to get emotions involved and it can screw with your learning. So make sure you really learn this shit. Deep dive into it. Obviously, if you want to start dipping your toes at some point and doing really small amounts, it's not a big deal. But if you just jump right in, go large amounts when you're still learning, then you're probably going to struggle. So that would always be my advice, is learn, practice small, and kind of build up, because just going into large positions is going to hinder you. Because everyone, what happens is they get confident, they do really well on small positions. Sorry, I'm texting my wife here quick. What happens is a lot of people do really, really well on small positions, and when they up the size, they just get absolutely clobbered and they lose a shit ton of money. They're like, okay, well, I turned this $100 account into $500 in a week, and then I took this $5,000 account and I turned it into $100 in 3 days. Like, what the hell am I doing wrong? It was working so great, right? But it's because emotions and not understanding risk management and going too large into positions, all right, and risking too much on positions. So practicing yourself is going to be the best way. And then really not trying to completely emulate somebody online. You need to create your own style. You need to find your own strategies. It's good to learn from people online that are successful and know what they're doing. But overall, every person's psychology is different. Everyone uses different indicators, sees the charts a little differently. So what works really well for somebody might not work for you, and what works really well for you might not work for somebody else, okay? So that's a very long, in-depth answer. Hopefully I didn't bore you guys with that. I'll go to the next question here. Do I look where POC levels are? I do not. I think POC levels are point of control. I don't know what they mean. I have no clue what those levels represent, other than my buddy Castillo Trading uses them pretty well. So if you want to learn about POC levels, follow Castillo Trading on Twitter. But that's not my cup of tea, or not my specialty. Can I explain the language? Can I explain in simple language why the market is indecisive while GDP is worse as expected? It's a chop fest, you guys. I don't know. I mean, look, the market's down a shit ton already. So you have people kind of fighting to hold this support here, because we're at support. So buyers are like, well, this is a support, I'm going to buy, just like they did here. And we got feisty, right? But like overall conditions are bearish. And we're technically in a recession or whatever. So we're seeing that downside pressure as well, as people are not very eager to buy all. We've got some people eager to buy and we've got some people eager to sell, and it's kind of like that battle. Whereas, a couple years ago, everyone was just bullish. Everything was bullish. The markets were they weren't healthy, but they were, we had stimulus checks going here and blah, blah, blah. And, everything was basically like being bandaged over. And now we're seeing kind of some of the effects opposite of that. So mainly, you got a big support. This is the lowest Bitcoin's been in years. So what does Bitcoin do when it goes low? It bounces, right? Because people are still eager to buy Bitcoin. But overall bear market, overall downside pressure, you've got traders taking profits because they're not confident that price is going to bounce from here. You've got people that are looking at overall market conditions in the stock market and seeing that downside pressure, so they're selling here. So it's kind of like that push-pull, and you just get stuck in this choppy range, and that's why Bitcoin hasn't done shit. But yeah, and then we're getting all this bad news, right, from the government, and they're increasing rates and blah, blah, blah. So that's obviously adding to that downside pressure. And honestly, this is just kind of a rising channel for now, right? So anyway, let's see. What's the next question? I'm struggling to take an entry. Like today, I had 2 levels where I could get a bounce off, but it's like one is risky and one can miss a trade. What to do? Okay. Well, there's a couple things you can do. First off, I actually made this really cool video. Hold on, let me get to my YouTube. Okay. So I literally just made a video called 6 Steps to Entering a Trade. So I would recommend watching that. First off, you might enjoy that. That might be helpful to you. for entering a trade. But second off, I mean, that depends on your strategy. So if you have 2 levels you want to buy at, or let's just get out of here. Okay, so here's the first level you want to buy and the second level you want to buy. Realistically, neither level is more risky than the other. They're both the same. The risk depends on what you do. Okay, so if I go full size position here, okay, let's say that my stop loss is this red line. Okay, we're going to make this a red line. And let's say my stop loss is this red line. Well, if I go full size at this first level, then yeah, that's a 15% risk. And if I go full size there, that's a lot of risk. But, so if I go down here and it's only an 8% risk, okay, let's actually tighten this real quick. All right, so let's say this is my preferred entry and my stop loss on the position I want to be less than 5%, okay? So this is my max risk. Now, if I go full size entry here, my max risk doubles, right? But really, my risk should stay the same. If I'm risking $500 here, I can still risk $500 here. I just basically have to use half size position, which is fine. So I can use half size position here, no issues, and still get into that first entry if I want, if I think it's going to hold, okay? So that's one way to do it. Otherwise, you could run it as 2 separate trades. You could say, all right, I'm going to put my stop loss here at 2 point something%. If that doesn't hold, I can get it on this trade and put my stop loss here at 3% or whatever, right? But that depends on your personal strategy. Some people will ladder. They'll do like 30% here and 70% here. And if it bounces here, they still have some skin in the trade. If it doesn't bounce here, they get all their fills and they go. And the one thing I tell people that ladder is if you ladder and your bottom orders never get filled, then you're never losing money. Because if it bounces here every single time, I'm not ever losing money because it's never going below my lower fills, right? So getting your lower orders filled isn't always, or not getting your lower orders filled isn't always the worst thing in the world. It always sucks because you're like, oh, I missed out on some money. But it's never, it's not the end of the world. Market just is trying to bounce here, isn't it? So yeah, this is a trade setup I'm watching, you guys. I was going to set alerts for it, but basically if we break down this line here, then I can catch a short on this. So that's kind of what I'm looking at there. Anyway, that's on Berkshire. But let's see what's the next question. All right, good morning, good morning. People I follow are saying Apple's earnings after hours may be more important. I mean, Apple's a big stock with a large market cap. So, yeah, I mean, if Apple dumps after hours from earnings, then the whole market probably reacts to that and gets scared. But if Apple pumps after hours, then people probably get a little excited and buy into that and, kind of react off that. So it's just going to be a knee-jerk reaction. And in these conditions, that's what's going to happen. Everything's correlated. In bear markets, everything becomes correlated. In bull markets, you're going to see decorrelations everywhere. So everything's going to be pumping randomly. Some things are going to be pulling back as people move capital elsewhere. But yeah, that's kind of a big telltale sign of a bear market is when everything's correlated, from my experience anyway. All right. Yo, Gooner, hope you're good. I would like to know how you got into trading and if you have always just traded for yourself with your own capital or have done any funded accounts, blah, blah, blah. I got into trading in 2018 because the market went to shit and I didn't want to give back any more profit or unrealized profit, so I cashed everything out and I just decided to learn this shit. And yeah, that's it. I mean, that's the simple explanation of it. Market was terrible. It was bear market. Bitcoin was probably like 11K. No, it's probably like 8K when I cashed out everything. And that's when it went from yeah, I definitely panic sold at some point. That's when it went, but then I bought back a little bit and then sold again. But anyway, so yeah, like what, 2018, because I got in down here on like the whole market. Like I got in on XRP and I started getting into some altcoins before that alt season. But anyway, so I sold everything, pretty sure like down here. Like I definitely panic sold one of these drops. I can't remember which one, but I think it was this one. What is this? No, it was earlier in the year. I think I panic sold this drop. And then I bought back a little bit here. and then like somewhere up here, and it went up a little bit, and then I probably sold at break even. I can't quite remember, but I definitely panic sold like close to the bottom of one of these drops. But anyway, that's beside the point. We've all panic sold before, right? But anyway, so my point here is that I got out, like, you know, I had a great entry. I got really lucky with that. And I got out with profit still left over, and I wanted to learn. And basically, I was under the impression that Bitcoin was going to 3K, which it obviously did at some point. Oh, wait, that's not even the right freaking top. No wonder I'm confused. Okay. Jesus. Get yourself together, Gooner. All right. So, yeah, I'm pretty sure I actually probably sold, like, right down here somewhere on this drop. Yeah, that looks... Okay, this seems more logical. Okay, so I sold down here somewhere, and then it bounced up a little bit. I got back in at, like, 11K, and it bounced, and I thought I was a genius, and we were going to the moon again, and then it kind of went back to break even. I was like, I don't know what the hell I'm doing. I'm getting this out of this shit before I lose more money. And then I was under the impression that Bitcoin was going to go to 3K, so I was like, well, I got plenty of time to learn this shit, so might as well just start studying. So I started studying up, and rest is history, I guess. I just really started learning as much as I could, as I talked about on the beginning of the stream. But no, I don't trade for other people. People are like, oh, here, I'll give you $1 million to trade, and I'll give you profit. I'm like, dude, I can just take $1 million and trade if I want to. Why do I want to use your money and keep partial profit when I could just do my own money and keep all of the profit, right? Not only that, but I don't know. I feel like I have a pretty good control on my emotions for the most part. And if I traded somebody else's money, I think I would just be nervous and hesitant to take trades on that, honestly. So, like, I don't think I would have a hard time trading, and I would probably, like, miss, like, 4 good trade setups because I was too hesitant. And then I would take the next trade because I'd be like, oh, I should have taken all those. I'm going to take this one. And then I'd get stopped out and lose their money, right? So I don't want to lose money for other people. That's why I want to teach you guys how to trade and not just post random blind trade setups all the time that nobody knows what's going on. Like, I want you guys to understand what you're doing, so you can make decisions for yourself and hopefully make money for yourself. Because I really don't like losing people money. All right, that's not a good feeling. Some people don't give a shit. They just post whatever blindly. They don't care if people get wrecked. Okay, I actually care. That's why I post stop losses. That's why I teach risk management, because I really, really, really want to help you guys make money, not lose money for my own benefit on Twitter. Okay, let's see what else we got. The best spot and chill exchange for the U.S. That's a good question. You guys, I will only recommend exchanges to you guys that I'll use and that I trust. So just so you know, like Binance US, I guess, is okay. Their liquidity is kind of shit, but I mean, I feel like they're safe. And I think they got rid of fees, right? I'm pretty sure Binance US got rid of fees. So they might be a decent exchange. They have decent altcoins, but again, I'm not a huge fan of it. I just don't like it that much. KuCoin is pretty solid, but their fees are kind of high. Everyone talks about them being insolvent, but I don't see any reason to think they're insolvent as of now. I mean, they're one of the bigger exchanges, I thought. So I'm not too concerned about KuCoin, but for me, you guys, I don't keep like all my money on one exchange. I will never do that because you never know when just one exchange will get hacked or breached. And it would suck to lose all your money. I mean, it would suck to lose like a quarter of your money being split across exchanges, but I would rather lose a quarter than all of it, okay? So that's how I think. Coinbase, Coinbase One is okay. Coinbase fees kind of suck, but they're probably the best exchange for U.S. residents, unfortunately. I didn't like FTX US a couple years ago when I tried it. That's another option. I might switch to that eventually, or I might try it out again eventually. Yeah, so those are pretty much our only options, you guys. Binance has by far been my favorite. Back in the bull run, I could in 2018 or 2017 or whatever, I could use Binance as a U.S. resident, and that was awesome. So many options, right? Their fees are a little high, but not too terrible for spot. So yeah, if you don't want to use a VPN, you're gonna have to go with Coinbase, Binance US. KuCoin, BingX, and BitGet both have spot trading if those are two things you want to check out. But yeah, so our options are limited in the US for now. Let's see. I'm reading more questions. Oh, shoot. It skipped. Hold on. All right. What do you think about trading specific patterns for someone who is new to this? That's fine. Some patterns aren't going to work well in certain conditions, like cup and handles don't work well in bear markets. So I have a really good pattern trading video for on YouTube in my BingX series. So if you want to, learn about more patterns, you could check that out. But I mean, pattern trading is great, and I think a lot of veteran traders literally just trade patterns, and that's it. So if you want to trade patterns, go for it. Like, that's fine. You just need to understand how they work and what invalidates them and validates them, and make sure you stop losses, because there's plenty of fake outs. So not every single pattern is going to work out the way you think it will. So patterns are great, though. I use patterns all the time. They're pretty much like the easiest thing to see if you're looking at a chart, right? Like if you see head and shoulders, it's pretty freaking obvious. If you see a bull flag, right, in a bull trend, or a bear flag in a bear trend, like those are great patterns to use. And then as far as patterns go, I always say make sure you understand continuation and reversal patterns, okay? So that's very important. Reversal and continuation patterns. And I talk about those a lot in my videos. Let's see. What else we got? What do you think about trading a specific... Oh, that was the same one. How good do Arsenal look at the moment? That's a tough one, you guys. It's preseason. I mean, we just smashed Chelsea, but I'm really happy with Jesus signing. I'm really, really happy with Arteta, shoring up our defense a little bit more. The discipline on the squad, the commitment in the squad, and people actually want to win now. I mean, I remember back we had Ozil and some other... I mean, it's not to call it Ozil. I really liked him, but I remember we had Ozil and a lot of those older guys like Ramsey and all them. I mean, Ramsey was probably a little different, but we had some of those guys, we'd lose a game like 3-0, and they'd just be smiling after the game, and I was oh man, that pissed me off. There's nothing worse than see your team get crushed, and then the players are just smiling after like they didn't even care because they got their paycheck. So the commitment in the team's awesome. Everyone wants to win. Everyone hates losing. Everyone's trying hard. That was a problem too. A lot of times people just were comfortable in the squad and they weren't trying hard. So it's promising. If you're an Arsenal fan, it's exciting. Even if we don't get top 4, I think that's the expectation this year, but a lot of teams are looking good. So it'll be interesting. I'm happy to see us not conceding so many goals. That's for sure. Let's see. Big thanks for your educational content. I just began trading and find it super helpful. That's awesome. I'm glad you enjoy. I appreciate it. How many trades do I take on average weekly? That just depends on the market, I guess. Sometimes I can take 1 to 2 or 3, and sometimes I can take 50. What do I think to the reaction of price from the GDP news? I mean, it's just chopped, so I haven't seen anything happen. It went down, and now it's back up. Bitcoin reclaimed trend line, which is good. And so if we can break this trend line, then we probably get a breakout here. And this could end up being like almost like a Captain Hook type pattern. I don't know if you guys have seen my Captain Hook video. It's a kind of sloppy, but you kind of get your consolidation here and then a breakdown and reclaim. So if this reclaims, we probably go up. So yeah, if this can reclaim here, then we can definitely break out here. So that's something to keep an eye on. Post that on Twitter for the peeps not in this chat or in the group, in the live stream. Okay, there we go. All right, let's see what we got next. Thanks, you guys. I appreciate you guys. We got a lot of people on here. Best advice for me starting with small capital. I don't know. Good risk management. Treat your account like it's a big account, because if you blow it right away, you just keep blowing small accounts because they're small. Some people start out and it's easier in a bull market. Like some people start out with like $1,000 in a bull market, and then like 2 months later they've got like 50,000. Okay, it's not gonna happen right now. Start small, preserve your capital, slowly build. maybe in a year, your account is 5x and you're trading a little bit larger sizes and you're making a little bit more money, but just don't go crazy because it's a small account. If you have a large account somewhere and you like take a few bucks to a small account as like a more aggressive account, that's fine. But if you just have like one small account and you're trading it very aggressively, you're just going to lose that account and you're going to keep rolling it over and losing again and blah, blah, blah. So, I would just say trade it like it's a larger account, treat it with good risk management, and find some strategies that work. And if they start working and you start growing that account, that's great. And then just keep building it. Because once the problem is, I think a lot of people don't see their account grow fast enough when it's smaller, and they get impatient and they try to go big and then they blow the account. But if you really, really are patient and trust the process and think ahead, once you start to see that account really grow, you're like, like a month later, you're like, oh, this is up 20%. That's pretty good. Oh man. 2 months later, you're like, oh, this is up 30%. I had a good month, and then maybe you're down 5% or 10% the next month. And then 1 month you have like a 50% profit. And you're like, damn, okay, I'm starting to see this grow now, and I'm starting to trust the process. And like, this was like $500 and now it's like $2,000. And maybe in another 3 months, it'll be $4,000, right? So just be patient, trust the process. Let's see. Somebody asked if the stock market is easier than crypto. I've been paper trading and have better results than crypto. Maybe it's because there's no real money and psychology kicks in. Paper trading definitely can help your psychology. So yes, you could just be better at paper trading. Personally, lately, I think crypto has been a lot more choppy than the stock market. So I would say lately, yes, the stock market's been a little bit easier to trade because of that. But overall, crypto is just more volatile. So you kind of have to use like if you're using a 1% risk on the stock market, it could take like hours for your stop loss to hit. If you're using a 1% risk in crypto, your stop loss could hit in 5 minutes, right? Like that could happen in the stock market too, but a lot more times than not, like crypto is just more volatile and sees more swings because the market caps are lower. So that could be why too, because you're just getting, the crypto is like a little bit more unpredictable. You have crazy ass stop hunts and wicks in crypto that you don't always see or see often or see ever in stocks. So, a little bit of everything, but I don't know if one's easier than the other. It's just kind of like getting used to the differences. How long did it take me to become consistently profitable? I don't know. I was really, what's the word? I was really conservative at the beginning, like really, really, really conservative. So, I would say after 6 months, I was seeing like not like I wasn't losing money. I was just kind of like, I remember just going sideways for like probably 6 months when I first started. Like, I feel like I would like have a nice month and then I'd give it all back and then maybe I'd be down a few bucks and then I'd have a nice month and I'd give it back. And I just remember for a while just kind of going sideways and I was like, well, I'm not losing money. I'm making a few bucks here and there, so I'm just going to stick with it and see what happens. Like my risk management was always really good because I'd learned from, my mentors basically about risk management. So I was never just like getting tanked on an account. So I think that helped as well. But yeah, I really don't know the answer to that, but I've been doing it for like 5 years now. So, let's see. Somebody said, answered somebody else's question. If I would start slowly trading with real money if you have a system that seems effective. If your system breaks, once that happens, there was an issue in your strat. Yeah, and you guys, what worked for a while might not work. Like a lot of people just traded downtrends. Like they had price going like this, and they got a breakout. And they would just trade this breakout in the bull market and it would moon. And they're like, oh, this is easy. I got this. And then bear market came around and they'd see the same setup and they'd go, oh, this is easy. I got this. And it would go, and they'd get stopped out big time because they didn't learn risk management. And they had no stop losses because all they ever knew was the market goes straight up all the time and they didn't need stop losses. And now they're like, like huge losses because price just nukes on them and they're like, oh, it'll bounce, you know. So that's what people do, is they don't know how to actually trade. So they're like, oh, this is going to go to the moon. Oh, it's just a pullback. It's fine. Oh, it's just a pullback. It's fine. Oh, shit. Okay. I guess I'll close this at a mega loss or get liquidated. So, yeah. Let's see. What was I even answering? I don't even remember. Oh, I was talking about different strategies. Yeah, so the markets will change. They're always changing. What worked for 5 years might not work anymore the next year. You know, like just different patterns may not work anymore, things like that. So just be mindful of that. And if you feel like something's just really not working, stop using it. Like, don't just use it a million times. And that's what some people have done this whole bear market, is they've just keep trying the same damn thing. And it's like, at what point do you go, okay, that doesn't work anymore, I need to do something else, right? All right, let's see. Can I show us quick scalp live? I mean, there's nothing to trade on Bitcoin right now. I mean, my here's my quick scalp if it works out, is this. If this breaks down, set an alert here. If this breaks down, that's what I want to short, and it'll probably at least go to 284, if not, you know, like 282-ish. So that would give me probably like a 1% move or something. Yeah, a little over 1% move, so that's fine for me. I had an entry on this, a very small entry on this one earlier this morning. It's back to break even now. So, yeah, I got in here this morning, like literally right here. Yes, I'm down 0.01%. And it dropped 4%. Now it's up to break even. I probably would have closed some of that if I wasn't on live stream. But, again, it was a small position. So, not the end of the world. But, so, yeah, my stop loss will probably get stopped out if it breaks up above here. So, hopefully that breaks back down. But you're seeing crazy volatility today. So this is my main trade I'm looking for, you guys. This is the one I'll probably add a little size to if it breaks down. We've got high sell volume here. So really high sell volume, high breakout volume, but again, way higher sell volume rejection. This looks kind of like an evening star pattern. So if this breaks down, it's pretty high likelihood that it breaks down further from there. So hopefully I get my breakdown. Let's see. What else we got? Oops, wrong button. Okay. So, let's see. What time is it? 10 o'clock. Sweet. We got about another 15, 20 minutes. All right. Thanks for some of you guys answering questions. In here. Somebody else talking about Coinbase's fees. Whoa, geez. Hold on. It just skipped on me. How to enter breakouts. As market dumps, it can dump quick. Do you want to enter late? So, I mean, here's the deal, you guys. Entering breakouts right now is more risky than entering breakouts a month ago. So, really, your best bet right now is to buy. I mean, we're kind of at support. It's been really choppy lately, but, and I have videos for this, but like here on this chart, there's actually an inverse head and shoulders right here, okay, that I can pick out. And, of course, in stocks, you have gaps. You don't get those in crypto. So, if you're new to stocks, then that's why. So we basically have a left shoulder here, a head, and a right shoulder, okay? So basically, you're going to wait for a close. This is how you buy a breakout. You're going to wait for a close here, okay, a close above, and then the second one you're going to want to retest, and if that retest starts holding, that's where I'm going to get in. Okay, so breakout. This is my breakout candle. This is my retest candle. It holds, so I'm going to say, all right, I got 2 candle closes. I feel good about this. And I'll probably just put my stop loss below there. And my target would be from the base of the head here. And again, I have a really good video for head and shoulders patterns. You can see it hit perfectly, actually. So that would be the final target. Put my stop loss a little lower if I wanted. So this would give me like a 1% risk to a 3.5% reward. So that's a really nice risk to reward there. Yeah, and then you can see the target eventually hit perfectly. So that's how you would play a breakout, though. You know, you want a trend line break. You want it usually to be on volume. We didn't have much volume here, but overall we just don't have much volume anyway. So the actual volume on the head and shoulders looks pretty good, other than that weak breakout. But then you get this strong breakout finally, and that's kind of when it sets things off. So, yeah, I mean, that's how you would trade it. You wait for a breakout, a confirmed breakout, because what happens a lot of times is people try to FOMO in on this little wick above, right? And it wicks back below and rejects and then dumps. And I actually think KNC did kind of something yesterday. So look at KNC here, and I'll show you guys this. So yeah, I mean, here's a good example, right? You gotta wait for that breakout because these people got trapped and probably panic sold. Then these people got trapped and probably panic sold. And then it finally broke out. Now, obviously, you didn't get a retest here, but maybe you got a retest on lower time frames, which you didn't. But I think there was like some news, or it was FOMC or some shit. So, you know, you technically could have gotten this retest on low time frames, this breakout retest. But usually waiting for a retest is going to be your best bet. And again, you don't always get it. So maybe this is one trade that just didn't work out. Maybe this is one that you just didn't take because you got no retest. Okay, you're just like waiting for a retest. It never came. You move on to the next one, and you hope the next time you get a retest, and then it goes, and you can catch it, right? Because what you don't want to do is have no retest, and you're waiting on a retest, and you're like, oh, shit. Okay, I'm FOMOing. It's not going to retest. And then what happens is it dumps, right? Like, that happens. So you're never going to want to FOMO no matter what, right? FOMOing just isn't the answer. So that's how you trade breakouts. I do have videos for that, so you guys watch all my videos. Like, I can't tell you enough. Like, every video is full of, like, so much information and so much, like, fundamental, like, tips and stuff. So I can't tell you guys enough to watch my videos. Let's see. How to enter breakouts. Wait for close. Okay, that was a lot. So somebody's interested in my portfolio tracker. Can you provide an overview of what I share? I don't do scalps. My portfolio tracker is more high time frame. So we're looking at like 4-hour charts or 1-day charts. So we hope to buy and hold for at least a couple days if we get into positions. It's really low risk. So a lot of people just learn how to manage a portfolio and manage risk. I mean, that's really what it is. So it's $20 a month. But I can't accept crypto right now because my crypto payment processor kicked me off of their platform. So right now it's credit card only until I figure out how to get crypto back on there. So I apologize for anyone that's wanting to get in on that and pay crypto. But I promise you, if you pay credit card, it's secured, like, you know, whatever, your information's safe, all that good stuff. But yeah, it's not scalps. It's high time frame positions, high time frame swing trading portfolio. Let's see what else we got. How to enter a position on a bounce from support as opposed to a breakout at resistance. I mean, that's kind of what I just showed, right? Like, here's one. Here's a support. Price broke up. It retested support. You got a nice little tweezer bottom here at support for entry, and then there you go. So, I mean, you know, if you're looking to enter support, you want to see a support hold. Like, here you've got a couple support holds. Here you've got a breakdown. So, I mean, it's all about risk management and stop losses. Do you DCA or full-size positions? I don't really like DCAing. Every once in a while I will. I have different strategies for it. It just kind of depends on the trade. If I'm playing like a momentum trade and I don't quite know if it's going to reject yet or not, like if I'm trying to short and it's going to keep, and I can't tell if it's quite ready to drop yet, but I think it's close. A lot of times I'll just like put a small position here, and then if it drops, I'll maybe put a little bit smaller, and if I feel good about it. Otherwise, I'll just let it run. Or a small entry here, and then maybe I'll do like another tiny entry here, and I'll maybe give myself room for one more, and then hope it drops, and if not, I'm going to cut it. So it just kind of depends on the specific trade, but most times I don't DCA. I just try to get my prime entry. Like, I'm waiting for this entry. If it doesn't come, I don't take it. Or I'm waiting for this short entry. If it doesn't come, I don't take it. Or, you know, I usually try to catch the retest. So that's what I look for. So, because I don't really like to knife catch much in either direction, knife catch shorts or long. So basically what I'm looking for is like a big rejection and then a lower high. And then I'm going to short this, right, with a, you know, a tight stop loss. So that's what I'm usually looking for. And then I can go full size there because I expect it to go straight down from there and not up anymore. All right. Let's see. Greetings from Bulgaria. Cheers. Greetings from Nebraska. How do I get confidence to enter a trade? It's really hard for me. I can't get confident. It's so hard. I don't know how you are confident enough to trade. Well, I mean, sometimes I don't have confidence in my trades, but I still take them. You know, the thing is, if you don't have confidence to do a trade, maybe you shouldn't trade, or maybe you should just go really small. Do a very, very, very small position that doesn't matter and just keep testing it out, right? That's the only way to build confidence is to practice. maybe paper trade, right? Until you have your confidence up. But the biggest thing is you just have to trust your TA, right? Your analysis, because there's nothing worse than being like, oh, I think this is going to go up here. And, maybe you're going to accumulate here and just put your, like, some people do this, and this is a valid scenario. You've got this breakout here, and you've got some accumulation, and it looks like a rising channel. So if you just start accumulating small amount in here, there's nothing wrong with that. And you just put your stop loss like down here, okay? And you say your target's up here. That's fine. That's a 2-to-1 R to R. But anyway, let's just say you're doing this, and you're just accumulating here. There's nothing wrong with that. And it breaks out. Great. But you're scared to, right? And you don't understand risk management, so you go too big in here, and it drops, and you panic sell or whatever. But basically, you're saying, all right, this looks like a bullish ascending triangle, all right? It does look like it. It's probably going to break to the upside. If it breaks down, it's invalidated. So you would close if it breaks down. No problem. And, yeah, it obviously broke out. But the problem is a lot of people go, okay, well, this could break down. I don't know. They don't trust their TA. And then it happens. They're like, oh, that was a great trade. I need to take that next time. And then next time what happens is they see the same thing. And they're like, well, I didn't take this last time, so I'm going to take it here. And then it goes, and it breaks down on them. And the key is you have to take these over and over and over. Because if you pick and choose, because the problem is, let's say these patterns are like 60%-ish. 60% of the time these patterns work. So you have 1, 2, 3, 4, 5, 6 times this pattern is going to work. And 4 times, it's not going to work, okay? And this is the problem that a lot of rookie traders make, is they go, okay, I see this pattern. I don't want to take that trade. So they don't take the trade. Okay, I see that pattern again. I'm not going to take it yet. Okay, I see the pattern again. I'm going to take it. And they take it here. So now they would have won 2 of those, but instead they lost 1. Now they see the pattern again, and they're like, oh, I just lost that one. I'm not going to take it. And they see it again. They're like, all right, I'm going to take this. That's fine. So they take 2. Maybe they make their money back. Then they go, oh, God, I see this pattern again. I just made money. I'm not going to take it. And then they see it again, and they don't take it. Okay? They see it again, and they take it, and it hits here. And they're like, well, it worked. I'm going to take it again. Ah, shit. I'm going to take it again. Ah, shit. It didn't work 3 times in a row now. I'm not going to take it. And so they lost 4 trades and only won 1 when it worked 60% of the time. So you can't really sit out hands. It's just like poker or blackjack. Like if you sit out hands, you decrease your odds of winning. So you gotta take them when you see them. If they're high probability setup, basically more than 50% or 50%, you take it when you see it, and you hope it works out more often than not. I've heard a lot of traders say that the fewer indicators you use, the better. In general, yeah, I mean, that's a great... again, indicators are basically made of price. BinX is the only indicator that doesn't really always listen to price. And sometimes you'll have price doing one thing, and BinX will be doing completely something else, and you're like, oh, that's really weird that price is doing that, but BinX is doing this, and maybe BinX is telling me something. So but other indicators like OBV is directly related to price. Granted, sometimes you'll see OBV, going up when price is going down, which can obviously happen with other indicators too. But basically, in the, what's the word I'm looking for? In simple terms, price makes the indicators move. Indicators don't make the price move, so you really don't technically need the indicators at all. You really don't need them. It's all about price action. Whatever happens on the chart, what's seen on the chart is what's going to keep happening or what's going to make the next move happen. So indicators don't really matter in the long run, in the end. But I just use my EMAs, my SMA, Gunnar EMAs. Those are a free script. It's the 11 and 22 EMA. I use BinX and OBV, but honestly, most times this is how my chart looks. I look here, look at everything I see, and then I'll go, does BinX and OBV back me up? And if BinX and OBV back me up, then I say, okay, I feel good about this. So yeah, less indicators the better, in my opinion. And not only that, make sure you actually understand how the indicators you're using work, because a lot of people use RSI religiously and they don't even understand how it works. So make sure you understand how they actually work. Okay. It's always possible to get rugged or you get stopped and then it reverses. That's hard. Yeah, it is. It's going to happen to you a lot. I do have some videos on stop losses. Check those out on YouTube. But there, you got to have a stop loss, because what happens is, and even in the bull market, a lot of people did this actually. They were like at the top. They were like, "Oh, I've gotten stopped out too many times. I'm just going no stop loss. We're going up." Well, you do that one time, you're wrecked. So I know you don't want to use a stop loss, but you need to. I don't care. I would rather get wicked out than take a huge loss and just get nuked. Okay? That's always been, I would rather get stopped out with good risk management than just have something completely tank on me, which has happened before, and it's crypto, and sometimes crypto just dumps 20% for no damn reason. Okay? So stop losses are important. If you're getting stopped out a lot, use smaller positions, widen your stop loss, okay? Because if you're getting stopped out, let's just say, you would normally put your stop loss here, and that's good risk management for you at a 4% risk. Well, you get stopped out every time you're doing this, okay? Get a smaller position size, move your stop loss a little bit wider, okay? Now you're risking the same amount of money, but your chance of getting stopped out are less, and actually you might make more money in the end because you're getting stopped out less, okay? And then once you start getting better at it, you can start tightening your stop loss if you get better at your entries, okay? Do I do TA or also tools like ExoCharts? I don't know what ExoCharts is, so yeah, I just do TA on TradingView. That's really all I use. Can I elaborate on entries? You guys, I showed you that video earlier. If you just joined me, I'm not going to sit here and explain something that's really in-depth explained here. 6 steps to entering a trade. Go watch that video if you want to learn more about entries. I think it's a great video. Do I have a YouTube showing my doing shorts live? I have tons of shorting videos on my YouTube. I don't know if I have any. On some of my live streams and stuff, I've done shorts live. So yeah, I'm sure somewhere on my YouTube there's some stuff like that. Let's see. I got time for like a couple more questions. Thanks, you guys. I appreciate all the nice comments. I appreciate you guys all joining. Holy cow, I need to stop being so boring. Maybe I'd get more people on. I'm just sitting here like, oh, yeah, this is cool. I need to be like, yo, that's a great question. I have a great answer for you. Actually, my last video I just made, it's not out yet, but that was pretty fun to make. I kind of acted, well, no, I didn't act weird, but I just kind of had some fun with that one. Let's see. When I see a reclaim rejection of support and resistance and want to take a trade, how should I go about confirmation? I often get stopped out and I get a little wrong too often. I don't know how to answer that. If you're looking for a retest, you want to see like signs of the support hold. So maybe it's like a big lower wick on lower time frames or a tweezer bottom or something, It's just going to depend, but if you get a nice high volume breakout and then a low volume retest, that's usually good confirmation. For me personally, if I'm just using price action. So, the Chinese Binance days, good times. Yeah, Binance was crazy back then. And I didn't know about USDT in 2018, so I just didn't know what to do. So I put everything, like my altcoins that I sold, I put them into Bitcoin, and then Bitcoin dropped like 20%, right? And I was like, what the hell? Oh, that was frustrating. And then I finally learned about USDT like halfway through 2018. I was like, oh, that would help me a lot of money. Market order or limit order? Leverage, how much? I actually have a video on how much leverage to use, so you should watch that video. Market or limit order is just going to depend on you. Some people are better at limits. They set limits at their trend lines and they hit and everything's dandy. Some people are better at market orders. There's not a right or wrong answer to that. Yeah, thanks you guys. Don't be one of those always enthusiastic influencers. Bitcoin's going to 100K, you guys. Ah! I can't be like that. Oh, look, Bitcoin's breaking out. Ooh, we're doing the Captain Hook. Doing the Captain Hook. Doing the captain hook. That's the captain hook. I wish I took. See, if I was paying attention, I would have bought here on this retest. This would have been the retest here to get into. Broke out here, and it retested this little wick area, and now it's taken off. I wish I would have actually been paying attention. I would have longed that, but anyway. Boop 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 boop. Oops, wrong button. Oh, I'm trying to post this on Twitter now as an update. Bitcoin. All right, so that's a bullish pattern. I actually have a good YouTube video on that. So anyway, guys, I gotta go. I gotta get starting to pack. I'm heading to LA tonight, so I gotta go get packed. I'll post some charts if I have time here in a little bit. But thank you all for joining me. I really appreciate you all. Feel free to post questions in the comments for future anytime you want. Okay, if you have video suggestions, post them. I'll make videos for you guys too. But anyway. Peace out, guys. More people asking about retests. I do have videos on my YouTube about breakouts, patterns, entries, retests, things like that. So watch some of my videos. There's tons of detailed, like in-depth content on there. It's going to be way more detailed than a 2-minute answer for me on this live stream. So please watch my videos. If you still have questions after watching my videos, feel free to post them in the comments below or on my Twitter. All right. Thank you, everyone. You guys are awesome. Man, I have so many people in here. This is so awesome. You guys are like, I just appreciate you guys all being so fun and asking questions and, following me and, helping me share my content. I really do appreciate it. I like sharing education. It's really what I enjoy. So thanks again, you guys. I'll catch you next time. Next week, we'll do another live stream. But until then, peace.